Wall Street groups urge Basel to rethink outdated 1,250% crypto capital rules. Traditional banks. Wall Street groups urge Basel Committee to pause 1,250% crypto capital requirements, calling 2022 framework outdated as banks face punitive rules on tokenized assets. Crypto journalist. Hassan. Crypto journalist. Hassan. About author. Anas is a crypto-native journalist and SEO writer with over 5 years of writing experience covering blockchain, crypto, DeFi, and emerging tech. Author profile. Share. Copied. Last updated. August 20, 2025. Major financial trade associations, including the Global Financial Markets Association and the Institute of International Finance, formally requested the Basel Committee on Banking Supervision pause implementation of its 1,250% capital requirement for crypto exposures. The August 19 letter argues that the 2022 framework has become obsolete due to rapid developments in distributed ledger technology and the explosion of regulated digital asset markets since its adoption. The coalition's impact of distributed ledger technology in capital markets report highlights how current rules make it uneconomical for banks to meaningfully participate in crypto markets, creating a bifurcated financial system where digital assets operate largely outside traditional banking supervision. The group cite examples like tokenized U.S. Treasury securities receiving punitive 1,250% risk weights simply for existing on public blockchains. Banking industry pushes back against cliff effect capital punishments. The associations criticize the Basel framework's rigid distinction between permissioned and permissionless ledgers, arguing it creates arbitrary cliff effects, where otherwise low-risk assets face massive capital requirements. Under current rules, tokenized government securities on public blockchains receive the same punitive treatment as speculative cryptocurrencies despite backing by U.S. Treasury bonds. The letter recommends eliminating permissioned versus permissionless ledger distinctions for Group 1 crypto asset eligibility, noting that risk should focus on the underlying asset rather than blockchain infrastructure. Additionally, the groups propose removing the infrastructure risk add-on for Group 1 cryptoassets as unnecessary and inconsistent with technology neutrality principles. Banking groups also challenged the current 1% and 2% exposure limits for Group 2 cryptocurrencies, calling them too restrictive and featuring punitive cliff effects that discourage regulated entities from offering crypto services. The restrictions push demand toward non-bank institutions operating outside traditional regulatory oversight. Furthermore, the associations questioned the empirical justification for 100% capital risk weights on Group 2A cryptoassets like Bitcoin and Ethereum. April 2025 data shows these assets trade with higher volumes than many large-cap equities and major foreign exchange pairs, with observed volatility suggesting much lower appropriate risk weights around 54%. Concurrently, Wall Street's crypto embrace accelerates through multiple channels. Major ETH treasury companies recently pitched Manhattan investors on Ethereum as tomorrow's financial infrastructure foundation, with corporate treasuries now controlling over $28 billion worth of Ether across public companies. Institutional integration reshapes traditional banking landscape. Earlier in June, JP Morgan launched its JPMD digital deposit token on Coinbase Base Network, marking the banking giant's biggest step into public blockchain technology. The fully dollar-backed token targets institutional clients initially, with CEO Jamie Dimon acknowledging the bank's strategic shift, stating, "We're going to be in it and learning a lot." Major banks are also developing both individual stablecoins and collaborative industry-wide digital currencies, though none are expected before year-end. Bank of America CEO Brian Moynihan recently confirmed his institution's stablecoin preparations, describing an anticipated complex array of digital currency offerings. However, internal banking concerns mount about stablecoins potentially undermining traditional deposit bases. Federal law requires stablecoin backing funds to be invested in government bonds, providing guaranteed profits to banks while offering depositors no interest. Unlike traditional accounts, stablecoins carry no federal deposit insurance protection. The crypto IPO market has simultaneously exploded, with Circle's June debut valuing the stablecoin issuer at $35 billion after shares more than doubled. Bullish raised over $1.15 billion in its recent public offering, while BitGo, Grayscale, and Gemini have submitted confidential listing filings, according to Reuters. Notably, Renaissance Capital's Matt Kennedy noted in the Reuters report that Circle's trading has really been the biggest green light for the industry, with positive regulatory developments and friendly oversight creating powerful momentum for public offerings. Looking forward, the Basel Committee is facing pressure to modernize rules that industry participants argue prevent regulated institutions from safely integrating digital assets while pushing activity toward less supervised entities. The association's recommendations aim to create risk-sensitive frameworks that recognize the technological development of crypto while maintaining financial stability. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Your phone can now mine crypto. XRP mining app turns smartphones into daily miners. Why is crypto down today? August 19, 2025 XRP price prediction. SEC ETF decision pushed to October 2025. Bullish or bearish? Blockchain news. Thailand launches crypto-to-bot payment system for tourists starting August 18. 3 days ago. By Hassan. Altcoin news. Altcoin season shock. These 3 coins could make portfolios pop if rotation holds. 2 days ago. By Hongji Feng. Industry talk. Live crypto news today. Latest updates for August 18, 2025. Crypto market turns bearish as Bitcoin tests $115,000. XRP slips below $3. 2 days ago. By Jai Pratap. Best crypto to buy now in August 2025. Top crypto to invest in. 8 hours ago. By Alan Draper. New cryptocurrencies to invest in August 2025. Top new crypto coins. 6 hours ago. By Inesis Tavares. 12 best crypto presales to invest in 2025. Presale crypto list. 1 day ago. By Alan Draper. 15 new and upcoming Coinbase listings in August 2025. 2 days ago. By Elijah Rankovich. 15 new and upcoming Binance listings in 2025. 2 days ago. By Elijah Rankovich. What is the next crypto to explode in 2025? 1 day ago. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 16 hours ago. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. July 5, 2025. By Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? April 2, 2025. By Ben Beto.